nearly 6,000 stocks, ferreting out from them the best in terms of bankable ideas, the best in terms of corporate governance, the best in terms of consistency of sales, profits, margins, return on equity and return on capital. He's done a lot of work. And now Varindar Bansal is here with his small cap, big idea. Santa Varindar, what is it for today?
Well, Ion Exchange, clearly the market cap is nearly 480 crores for this company, and nearly 19% is held in treasury stock. So the market cap effectively is around 400 crores. It's a 50-year-old company. They are the market leader in water and environmental management. The triggers, of course, are many for this company: Swachh Bharat, water preservation, water recycling. A word on what the company is: they provide end-to-end environmental solution in water treatment, liquid waste treatment, air pollution control, solid and hazardous waste management, and generation of energy from waste. They basically have three segments. The first segment is the engineering one, where it constitutes nearly 55% of the revenues. The chemical is the 35% of the revenues. And the last one is the consumer product, which is nearly 10% of the revenue. In the engineering division, it can easily be compared to VA Tech Verbag, where the company manufactures and market large equipment for water and waste treatment. The second, of course, is the chemical division, which manufacture ion exchange resins, which are used for water treatment plants. Basically, they are used in water purification plants. This segment has been delivering 20% growth since last many years. The last one, I'm sure everyone of us are familiar with, the consumer product division. They market domestic water purifiers, which comes under the Zero B brand. Zero B is one of their brands, and they have been, so this is the company behind Zero B brand. So in the consumer segment, that is the one. The most important, of course, for everyone remains the earnings of this company. If you look at the earnings for first half FY16 on a standalone basis, the sales were up 20%, EBITDA was up 13%, profit was up 62%, margins of that nearly 5.5%.
Why are the margins so thin for a company like this?
The engineering division is one, which has not been doing well because, they haven't been getting orders since last few years because of the low capex plans by the government, but which has been picking up since last, few months. They recently got a big order from Sri Lanka also, which is what, most of the people on the street are banking on. So if you look at the FY15 standalone EPS, is nearly 17.9 rupees. And analysts on the street are expecting that the company could clock FY17 sales of nearly 1,000 crore and a profit of nearly 40 to 50 crores. Imagine VA Tech Verbag, has a market cap of nearly 3,800 crores, and they have reported a consolidated profit of nearly 110 crores. So if this company, goes ahead and delivers a profit of 40 to 50 crores, people are expecting that it will not be surprised that the market cap of this company reaches 2,000 crore, in next 1 or 2 years, probably. Return on net worth nearly 12.5% for this company. Again, if you have to look at the debt equity ratio, it's very comfortable because the debt equity is at 0.63, interest coverage ratio at 2.6% for this company. For these small companies, it's very important to look at the shareholding pattern. And if you find some big name, it's always a plus point. The promoter shareholding is at 44.4%, but which is very good to see is that there are many prominent shareholders. Look at that. You have Rakesh Jhunjhunwala, who is holding 5.51% stake in this company. There is Mukul Agarwal of Param Capital, who is holding 1.73% stake in this company. So these are big names who have been backing this company as well. It's a regular tax-paying company, regular dividend-paying company. No equity dilution done by the company since last decade, since 1995. Few things which you should really keep on your mind. As I say, these are the things to watch out for. A few of their global subsidiaries, were making losses until FY15. Since last 2 quarters, they have been coming down and almost break even. So that's one area to keep an eye. You were mentioning about the margins, that is only because of their chemical division has been growing at 20%, growth. The engineering one is to focus on. Recently, they got a big order, but keep an eye on the margins of the engineering division. If they get more orders, which it is likely, then, the margins will bump up clearly. Under the IRCTC, we heard about this water NEER, which is coming up. They are the exclusive partners, for the NEER brand. So now for that water NEER will be supplied to all the IRCTC, railways in India. Yeah. So they are the only one. They are the only one, who is supplying this. So, I'll not be surprised that they may go ahead into the consumer, business as well, going ahead and goes in. Yeah. So, that's a story for you, which you should keep your eye on. It's a long-term story, of course.
No, I don't give a damn if margins are 5% or 6%, so long as earnings growth is 30%. I mean, that's a fairly substantial growth in earnings. And in an economy like this, if you can give 20% rise in top line, that's fair, definitely a performing company.
The plus point, Lata, here is that there are only 2 companies in this space. and it's VATech Verbach, and it's this
Ion
company Ion Exchange. And the difference between VATech Verbach and this company is 1/10. That company VATech is having a market cap of 3,800 crores, and this company literally post the treasury stock has a market cap of only 400 crores. So this is one interesting company which you should keep eyes on.
Okay.
All right. Santa Claus or... Okay, let me rephrase that. Santa Sing Claus. Thanks.
That's a good one.
Thank you for giving us that idea. This is not a buy recommendation, just to reiterate. It's only all of the in-depth research done by Varindar Bansal. But